Good evening, everybody. Okay, the first thing I'm supposed to announce, we're still getting a lot of inquiries for the training sessions for Keuka Lake this summer. It looks like we'll start the first one on Sunday the 9th. So it'll be Sunday, Monday, and no, I was wrong. Fly in Sunday. It'll be Monday, Tuesday, and half of Wednesday. So you fly out Wednesday evening. Then we will have another one where you fly in Thursday. We go Friday, Saturday, and you fly out Sunday. Keuka Lake, no. Keuka Lake. Phone, okay. All right. July, oh, you're right. I did that wrong. Now, skip all that. That's why. I think you fly in Sunday night. July 26th be the, so we'll be doing a Monday, Tuesday, and half of Wednesday. And then the second batch, you fly in Thursday. We go Friday, Saturday, and you fly out Sunday. So it'll be July 26th, and we'll probably only have about 5 spaces for each one. We're probably getting enough interest that we might be able to do a third one. Okay, as we can see, ever since we started seeing the selling in the Dow, and that selling came right at the same area they topped out before. So this is why when any price move or trend move gets to a level that everybody else is watching, it becomes a lot easier, a lot more clear to see what they're doing at those levels. We had the doji, the bearish engulfing, left-right combo. Then we had a bearish doji sandwich, and then they took it down below the T-line and never been able to get back up above that. So as long as it stays below the T-line, we know we're in a downtrend. Except the further away we move from the T-line, the higher the probability we're starting to look for, at least for a bounce back up to the T-line. And if we can see the stochastics are getting in the oversold area, and we see we have one support level here, and another support level here, kind of equating with the 200-day moving average, at least we can be prepared to start watching to see when a reversal is ready to come about. So the pullback is occurring. The only, benefit, the only non-worry part is still have a good portion of the portfolio trading positive based upon the charts. Now I'll get to those in a minute. And the NASDAQ also rolling over right at the level that it topped out before, back below the T-line. Stochastics heading down. First target should be right here at the 50. Second target, come up through the bottoms here, so we're looking at this area to see whether it's staying in the trend channel. But there's probably some more downside to the NASDAQ, except for the fact that we are right here close to a support level. So is it going to support here or support here? That we don't know. But the combination of analyzing the NASDAQ and the Dow, if we know the Dow might be near a support level in the oversold area, at least we can start extrapolating that if there's buying coming into the Dow at this support level, that more than likely there'll be some support at the closest support level for the NASDAQ, which would be the 50-day moving average. So it just gives us a little bit of time or a platform to figure out where the support levels and where the reversals might be. And I say might be because that gives us a little bit more alert to start watching for the signals that we know are reversal signals. All right, some of the other factors, interest rates by AM. Bond prices keep moving down, making the interest rates moving up. Again, they're still in such low areas that it take a big move to the downside to tell us that there's any major change in the interest rate arena. Gold, still in this downtrend. Same with silver. Silver, ever since it had the big reversal, and notice how far away we were from the T-line at the time, hasn't been able to get back up above the T-line, but now notice where we are. Stochastics in the oversold area, good distance away from the T-line relative to what it normally trades, and you can pretty much draw a line right through here. You probably want to start watching for a reversal in silver. I have been trading crude oil, but as we can see on the bigger chart, we've got this rolling top. Let's make this bigger chart a little bit smaller. And we're right back here on the 50. So we really don't know which way it wants to go, whether it's going to try to support at the 50, make this bigger, or if it breaks down, that tells us that we might be heading back to another support level, in this case, anywhere back down in here, or very simple process is you do a trend channel. Now let's say your trend channel is pretty much up through this level, which means your trend channel would be down at this level. Nothing sophisticated about that other than we're watching to see where support might come back in. On the other hand, we can take our Fibonacci numbers and see where this is the 38% retracement, there's the 50% retracement, and there's the 62% retracement, which that might be a good combination, the trend channel and the 62% retracement. Oh, I think, yeah, let's go. I think, is this the gold fund? That's GLD's gold fund. And let's see, what is it? USO. That's the oil fund, USO. And I'm sure there's some leveraged ones. Anybody know what the leveraged ones are? But trading the ETFs for the crude oil, no, that's right. The UWTI is the triple weighted. Okay, UWTI is the 3X, and it's rolling back. So right now we can see the dumpling top setting up in it. Okay, yep. All right, so let's see. So I've been trading crude oil. Well. And right now, I'm trading off the short-term charts because I don't know whether they're rolling this over or whether they've just pulled it back to the 50 and starting to pop back up. So I may have even closed out this trade. I think I might be long right now just on a short-term basis as long as it stays up above the T-line. This is off the 10-minute chart. Okay, so, and we've been in coffee. Whoops, that's the 10-minute chart. We've been long coffee ever since our best friend right here. And notice where it closed today, right on the 200-day, or on the 50-day moving average. Except it actually closed a little bit lower. If you watch the 10-minute chart, it backed off, but the 10-minute chart is still in this upward trend channel. So I'm going to kind of analyze tonight what to expect. What should we be expecting? Yes, I'm still long coffee right now on the daily charts. I don't know whether I closed it out with the idea that if it opens higher, I'll come back into it. If it opens lower, we know we're in a bobble. Yeah, so if it opens positive, which is above the 50, then you want to stay long. Then your next hurdle is this short-term downtrend. And then let me see if I can. So again, this is kind of knowing what your expectations should be based upon what the charts are doing and what the indicators or the confirming indicators are telling you. Is we're right here at the 50. 50 acted as resistance kind of twice in here. Now we need to see it get through. So if it starts trading positive after going through the moving average, yes. Now let me see what I did with coffee. Did I? Nope, I closed out coffee near the close because of the 50-50 element here. But if it opened lower, it's bobbling. If it opens higher, I'll buy it right back again. Yeah, it's just a function of where each chart has its closed. Just looks like it closed just slightly above, closed above the 50. But that was the open cry. The electronic traded back lower. So it actually, if it opens where it closes tomorrow, what did I do? It's just going to open a little bit lower. All right, let me jump on to, we're also long right now the euro, because we had the big bullish engulfing kind of cradle type pattern off the 50, and it hasn't been able to close below the T-line. So it did kind of the stutter step, which was a pull back to the T-line and then another bullish signal. So we're long on this one with the anticipation that your next target is right here, and if it breaks through there, there's your obvious next target. And anything going on tonight? Yes, we do. Oh, I don't even know what the symbol is for. Oh, is it Joe? Might be J-O. Okay. All right. Backslash. Yeah. Oh, there you go. Yeah, I don't know why I didn't know that. Because I traded off a toss. Yeah, backslash KCN5. All right, and so the euro is acting stronger, which means the dollar is getting weaker. And notice what it's done. It's done the reverse stutter step, where they brought it back down through the 50, and there's kind of your blue ice failure. Next target could be down here at the 200-day moving average. All right, some of the stocks that we are trading right now, we're still long OVAS. And the reason for that is observing the obvious. The obvious was it did a bullish engulfing signal right here on the 50-day moving average, did a doji sandwich up through the 50, and which you could see even if we brought it to here. That was basically doing a J-hook pattern that told us that the 50 was not acting as resistance. This area was not acting as resistance. There was probably more upside. So how long do we hang on to this? Until we see a sell signal and a close back below the T-line. With the caveat that if it starts moving away from the T-line pretty quick, we want to start taking profits. And that's basically what I did today on AMBA. Last week, and I can't remember what I paid for them. I don't think it was any more than $1.90. And the reason we bought the spreads was that if this was still moving up, I bought the, I think it was the 95 100s. And with it moving up, that spread now, I closed it out today at 438. And the reason I did that was it's already had a strong move, starting to show some exuberance up here, which is fine. But at 430 or at 440, if I hold it for the next 2 weeks, meaning into expiration, my maximum profit would be that they would go to 5. So I have to decide, I've already more than doubled my money on this. Do I want to hang on to that money or have that money in this trade for another 10 days to make 60 cents on 440? Because that's how much more I'd make above the 440 right now. And so that doesn't look like a good risk reward at that point. And I'm up here in the overbought area. This is where you might start seeing some profit taking. So I closed it out and moved on to something else. I can't remember what I moved on to. But when your trades start looking like the upside potential is starting to wane, that's when you want to start taking some profits. HZNP, cup and handle. Now notice where it backed off to today. Because a lot of the trades over there, Hal, are based on much bigger volume. And AMBA's got decent volume, but not huge volume. So they're working with a universe where the volume is going to be big enough that if a bunch of options come in on a trade, it's not going to, they're going to be able to still fill that trade. But AMBA was recommended in our options room. I usually put that out, and I think I probably even posted that in the regular room. HZNP, still above the T-line. You still got this cup and handle, so the anticipation would be if this came back up through today's open, that would be a nice breakout and telling you they aren't coming back below the T-line. Even though your stochastics are up here in the overbought area, we can see the classic, the fry pan bottom, J-hook pattern in progress. And where would this tell us that this profit taking is over from today? Coming back up through the open. I sold on the candle that closed below the T-line. Was that correct? On which one? Oh, last Thursday? Yes, that was correct. Because we didn't know at that point what it was going to do. Then it did a bullish engulfing signal. It could have been bought back today. Now, if you saw it open and start paying down or trading down, you still know that it's back up above the T-line. So now what's the best best trade strategy. You get ready to buy it if you're starting to see that this profit taking has been negated, and at that point, if I see it come back up through yesterday's open or today's open, I want to be a buyer because then I can see my J-hook pattern is in progress. Let's see, GIMO, another one, and this is the type that we're going to get into a little bit of anticipation based upon what we know about the signals. So what are we anticipating tomorrow with this doji? Well, if it opens positive, we can expect a doji sandwich that could take you right up here. So even on a day trade basis, if it opened positive, it might have a good quick little trade. If it opens positive and trade positive, it tells us this J-hook pattern is still in progress. On the other hand, if it opens lower, it's telling us that this trend isn't over, but it's probably going to be a slow uptrend. But it might come back and test the T-line. So if you're long GIMO, you stay long as it doesn't close below the T-line. That was somewhat along the same lines as ADXS. Came up, did a sell signal, a bearish engulfing signal. But what's been the criteria for this move so far? They haven't been able to close it back below the T-line. So it closed right here, gives me two options. If I closed it out, I buy it back if I see it trading up, or if I didn't close it out, it needs to open positive and trade positive to tell me the T-line is still in progress. If it opens lower, below the T-line after a bearish engulfing signal, then I'll close out the position, and then we'll have to see it close back up above the T-line before getting back in. We recommended BV today because of our message right here, this gap up through the resistance level. Even though it backed off a little bit today, I'd still be a buyer of this one more time. If it comes back up through today's open, that tells me the 45 degree off of here is I'm reading. So the target on BV, well, shows butts. What's that? Big fry pan bottom. I suspect it could come back up to the 200, which would equate to where it gapped down. I just haven't put the rules in writing, Jim, just because I need to sit down some night and put them all down. But we do have those stops in our stop loss video, and we can do a stop loss session here pretty soon. I got to find out from Becky what we have scheduled. For the next couple weeks, so I can see which nights are open, and we can do a stop loss. BV has earnings on, because it's getting pretty close, isn't it? It's Wednesday. Oh, DS, if you email Abraham at candlestickforum.com, he can give you the link for. If you go to the website, www.candlestickforum.com, go up to the top, you'll see products and services. There's about 50 or 60 different videos that you can pick up. And then from the members area, if everybody wants to see a particular subject, like scanning, I think is what we have scheduled for tomorrow night, how to do the scanning or what to look for in your scanning. That way you don't have, that way at least you can ask questions right there live versus just watching the video. Eyes still in a good uptrend, and what's our criteria for staying in this one? That it can't close below the T-line. And what makes this a strong uptrend? Our best friend signal, a little doji hammer gap up through the T-line, and then kind of your double doji sandwich. You just stay long as it stays above the T-line. AMCN. Another one that we're just staying long. Came out of the J-hook pattern. Doing another little J-hook pattern, but indecisive. But as long as it keeps moving up above the T-line, we stay long on this one. And this is a healthy uptrend. You get healthy uptrends when you take it up, profit taking. Take it up, profit taking. Up, profit taking. That profit taking keeps the exuberance out of the trend, so it's not zipping way up and then crashing back down. And again, as long as it stays above the T-line, you can stay with it. Here's our, we're still in USPN, coming out of a nice fry pan bottom. And why is the patterns more significant, or not more significant, are significant? Is because they're telling you a message. And this message is the fry pan bottom was building up, that we're going into the next wave. Here's wave 1, wave 2, wave 3. And the pattern is a buildup of investor sentiment, which is the accumulative knowledge of everybody buying and selling. And the cumulative knowledge was the market has been going down for the last week and a half, and this stock came out of the fry pan bottom and is still heading up. Was that a Harami on eyes today? No, remember where your bullish Harami needs to be, either in the overbought or oversold condition. It's a technically, I don't even know if that's big enough. No, it wasn't quite a bullish Harami because it closed above yesterday's open. Is USPN too far away from the T-line? As far as buying it here, I probably wouldn't be a buyer here. I'm a holder. The buying is here, or on this day, because you're still close to the T-line and you're just starting the pattern. Now you want to be holding this. So you don't need to be chasing after a pattern, because there's other patterns out there as we get to them. That we want to be going after those patterns versus one that's already working. Yes, most indicators are lagging indicators. The candlestick signals tell you exactly what's going on in investor sentiment right now. Stochastics are pretty close to being a close indicator. A lot of people like MACD, but MACD is a little bit of a lagging indicator. So I use stochastics as a confirmation of where the signals or the patterns are. Reading, I forgot what I was saying. That's just great. How do I find stocks before they get too far along? That's what we're here for, DS. Finding the right signals and patterns. So right now I'm showing you the ones that we're in and why we were in them and why, if they're still working. Here's another one that had the little cup and handle breakout. Now remember, we're usually trying to buy a signal when it's in the oversold condition. A pattern breakout is usually going to occur when your stochastics are in the overbought condition. So when this broke out, kind of a big wedge formation, what's our criteria? We stay long until we see a sell signal and a close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it, or test the T-line. So I've got a potential sell signal. There's my bearish Harami hanging man. What do I need to do with that tomorrow? It better open positive and trade positive to stay in it. If it opens lower, I take some profits, because that's the hanging man in the overbought condition is one of the major reversal signals. When figuring out a resistance area, looking how far back, that's up to you. I usually just see what the recent trading has been, and if I see something that might be a potential resistance level, then I might go back further and say, all right, is there something else that would act as a potential resistance? This is probably a bad chart to do that on, and now it's gotten even worse. But as I've gone back this far, you can see what this big chart is doing. Pretty much a fry pan bottom, and there's a little fry pan bottom. So it looks like people are starting to come back into this one. But on a short-term trading basis, we can see what the signals are doing, telling us what to do right now in this trend. Would you put a stop at the open of the candle if it opens positive? Would you put a stop? If I was going to trade this, I could put a buy stop at this level up here. Because if it comes up here, it's still telling us this fry pan bottom's in a breakout mode. If it opens here and starts trading down and I owned it, I'd take profits because now I would anticipate it's going to do a J-hook pattern. But I don't know whether they're going to take it down and keep right on going. So I'll wait to see when I take profits, I'll wait to see what happens off the T-line. Okay, let me see what else we got here. MX, another big fry pan bottom, and stick with the same criteria. This one gapped up. We're in a 45 degree, which is adding credence to this fry pan bottom. I'll still stay long on this as long as it doesn't close below the T-line. I was told by ICE.com coffee only trades electronically. It might. Let's see. I think some of them are. But there's I'll have to, Dave, I'll have to look that up. Let's see. What else we got here? SRNE, another one that you stay long. Might have a shooting star, but remember, it has to close more than halfway down this candle, and it didn't. However, if this one opened lower tomorrow, now when I say it opens lower, if I see this opening lower and the Dow is showing that it's selling off or the pre-market futures are down, that's a pretty good indication they're going to at least come back to test the T-line. So if I owned it, I'd take profits and then just wait to see what it does at the T-line. I don't mind selling out here and then buying back up here knowing that they aren't selling it off, the uptrend's still in progress. Okay, what else we got here? Oh, okay, so anticipation. If we know what the signals tell us and what the patterns tell us, we can pretty much be prepared for what to do. That's why we recommended XON today. Because XON had some bullish signals here. Let's see, I can make this big enough without losing the chart. It was curling up. We had another fry pan bottom, and where was it heading to? This resistance level. So when it broke through Friday, that told us there was a new dynamic. If it opened positive today, we wanted to be buying immediately. Now, remember what this stock has done, coming out of this little fry pan bottom over the last 4 or 5 days. At the same time, the markets have been doing this over the last 4 or 5 days. So again, that each individual signal and pattern is the strength of investor sentiment based upon they know the market's selling off and somebody's still buying. That was the same criteria for our recommendation on Cyber today, because it had closed after some buy signals. Look at your bullish Harami, right smack dab on the 50-day moving average, doji inverted hammer, then a gap up confirmation excuse me, of your bullish inverted hammer, and it broke this downtrending channel, which basically tells us wave 1, wave 2, kind of a rounding bottom going into wave 3. I'd still be a buyer of this on positive trading tomorrow because that makes our wave 3. Right now we're looking at wave 3. We're not in the overbought condition. We've just had a breakout and we bounced up off the 50 as a support, which acted also as a double bottom. Oh, does XON has options, well, I'll be a son of a gun. I would have bought some of those today also. Terry, I use other criterias, or if I like the daily chart and I'm just about ready to get in, and let's say this was backing off when I saw it, I'd still flip to my 10-minute chart and say, all right, I like this chart, but it's trading right here right now. I'll buy it when I see it start coming back up above the T-line. So tomorrow, I know the 10-minute chart. Now, the 10-minute chart means nothing tomorrow because, remember, the charts are the accumulative knowledge of everybody buying and selling during that particular time frame, and it's the graphic depiction of investor sentiment. And that investor sentiment can change completely in another 12 hours when they open up this market. If there is a previous top, should we expect some sell-off at that point? That's why you use the candlesticks and your other indicators. First of all, your signals are telling you there's buying. They broke out through this level. Even though they're right here at this level, our stochastics say they're still heading up. So it's pretty easy. If it opens positive, it's telling us that this level isn't acting as a resistance anymore. This right here is now the prime criteria going into wave 3. Oh, I think they announced their secondary offering, and it doesn't really matter at that point because people have made their decisions after the initial knee-jerk reaction of the secondary offering. They're now buying again, so they know there's a secondary offering, and people are buying. Okay, and so with that, if you can anticipate what a pattern should be doing, still like CORT, C-O-R-T, there's your fry pan bottom, there's your cup and handle, and notice what the pullback was, very indecisive. And notice what our current signal is. A left-right combo, bullish engulfing, closed right here today, makes this very simple. If it opens positive tomorrow, we've got the potential of a doji sandwich, and if the magnitude of tomorrow's trading is the same magnitude as this, bringing this up here, we're basically pushing on this breakout area with a cup and handle type a cup and handle type pattern. So we're buying the pattern, and the signals are telling us what's happening right now in that pattern. ATML is a good example of what happens when they break out of that slow curve, little fry pan bottom, and break out through a resistance level. That's what we're expecting coming out of these type of moves. Nubo was another example of a fry pan bottom. And where did it start breaking out big? Right as it got back to the top of this fry pan bottom. Where's the next likely target? I'm pretty sure we could draw a trend. Right there. So that would be, if I own this, that's where I'd be watching diligently to see what happens when it gets up there. When it does get up there and might start waffling, then I flip to my 10-minute chart and see what's going on. Gives me a little bit more faster, clear information of what they're doing at the resistance level. Fold is right here at the breakout level, a nice little slow curve. So if this is wave 1, wave 3 tells us they should be moving us up into this area someplace. They're right now at the breakout level, so positive trading from here tells us that the breakout resistance level isn't acting as resistance anymore. Oops, I think we did this one. IMCN, yes. Oh, that's because I just read that one wrong. That was some of the biggies. Amazon, this one had the fry pan bottom setup. So this is the exact reason why we want to know what to expect coming out of that pattern. Let's see if I can do this. We were expecting, or we should have expected, a breakout or start moving positive. The fact that they brought it right back down here told us, all right, we're still potentially in this fry pan bottom, but we haven't closed below the T-line. It's when they did this that told us this fry pan bottom trajectory is broken and we're back below the T-line. That tells us investor sentiment is not in the breakout mode. Get back out of that trade. Netflix, for example, also has had a nice steady uptrend, and we can stay long as it doesn't close below the T-line. What happens on these breakouts? You usually have a 45 degree. And what's our simple rule of a 45 degree? You just stay long as it doesn't close below the T-line. Isn't that a bearish kicker on Amazon? Not, yeah, it's, yeah, usually you want a big candle. That is kind of a negative move, which that's why you needed to see it open positive the next day to tell you the fry pan bottom trajectory is in place. All right, Glenn, I'll bring those up as we get to some. Now, eBay definitely had a bearish kicker signal today. So when you're in the overbought condition and you see that they've gapped it down to the previous day's open and started going the other way, this wasn't quite there, but it's close enough to tell you they're selling this. Get out of it. Because they shouldn't, if you're in an overbought condition and you're supposed to be in an uptrend, they shouldn't be gapping it down and trading back below the previous day's open. And Apple just hasn't got started here for a while. You can see the pattern. The pattern is sideways. So where is the next likely target if they start trading this lower tomorrow? You can pretty much draw a trend right through here, which would be the same as kind of right through here is your trend channel, parallel lines, which makes down here your next likely target. MP, yes, if you've got options, you've got a piece of paper that says that you can sell that piece of paper or somebody will buy that piece of paper from you. So if there's a buyout, obviously that piece of paper is worth a lot more. You don't have to wait to expiration. You can buy and sell that paper anytime or that option anytime. So if you've got a buyout situation for July, or let's say you've got the July option and all of a sudden they pop it up 30 points, well, you go ahead and take profits, just sell the paper. You don't have to hold it to expiration. Okay, what else we got? We did Netflix. So Trove is one that you want to, oops, I just apparently bought something. What just happened? I don't know. Sounded like I bought something or sold something. Oh, I bought something. Oops, I think I just bought some crude oil. That was the 10-minute chart. All right, that's what I was playing off, the 10-minute chart, that if it came up through that level. So right now I bought some crude oil. All right. Let's see, what were we doing? Trove. Trove is another anticipation. Notice our little morning star signal. Notice our that they can't close it below the T-line, and we got this fry pan bottom. And this, who was asking about the, Glenn, this is kind of, oh, no, this is more like the T-line crunch. Because if you can basically see that there was a resistance level right here, and you've got the T-line pushing up into that resistance level, that's your T-line crunch, which is also a breakout of that resistance level. Okay, I didn't know that, Don. Thank you. Let's see, Apple, eBay. Oh, this one looked like a good-looking chart. This we've got this rounding bottom. It broke through the 200, bouncing up off the T line. And let's see if I can do this again. Came up through the resistance level, or the potential downtrend. So that has potential to the upside. Where's your first target? Probably up here at the at this level, up about 12-15%. On Facebook is not a good trader right now, and the reason for that is, look what the overall chart is telling you. First of all, if you owned it from here, either your stop was at the T line or back down below the candle that told you the bulls were in control. But if you look at the whole chart, and this is one thing you need to do just as a very common sense exercise, what's the direction of this chart? Not enough in one direction or the other to tell you want to be trading it. So whenever I see a chart, now there's times where you have a chart that's great, then all of a sudden it goes bad, which means nobody's trading it for a while. Yeah, and cough, somebody was saying that they misdiagnosed or mislabeled the trade. It's not so much a fry pan bottom as it is a good J-hook pattern. This makes for a very perfect trade tomorrow. That if it opens positive, you've got a doji sandwich after your inverted hammer kicker signal, I would suspect you're still heading for the top of this trend channel. Once again, you can do a trend channel by just pretty much seeing what your parallel lines look like. Whoops. Well, Shazam. If you can kind of draw a parallel lines in a trend, it means your next potential target is up here at the top of that trend channel. Okay, now they're calling it a J-hook. All right. How much weight do I put on Facebook? None. Facebook is what I would call more of a boutique type trader. Google put a little bit more weight on it because everybody knows it's bigger on Google, but Apple is probably the biggest one to tell you what the market indicator is. Also, some other market indicators are your big brokerage stocks, like Goldman Sachs. As long as Goldman Sachs is staying pretty steady or above the T line, or JP Morgan. Whoops. Do it this way. JP Morgan. As long as they're in an uptrend and haven't reversed your you can usually use those. And the old standby was always IBM. And IBM, as you can see, is moving with the way the market is moving. Okay, so anyways, PGNX is probably a good breakout type situation. So you want to definitely want to keep an eye on this one. Because if it's broken this downtrending channel, now it's got some running room to the upside. And the thing that told us that there's good strength in it is kind of the Morningstar signal. Notice this is also kind of your T-line crunch. And also close to your bobble. And a bobble is when it moves up, hits a resistance level, pulls back, but can't close below the T-line. The next time it goes through that resistance level, you've got a couple things. First of all, you've got the bobble breakout. Secondly, you've probably got a J-hook pattern. And third, when it went up through this resistance level, it's telling you that resistance level isn't acting as resistance anymore. As your watch list keeps growing, when do you take stock off the watch list? I'll do that in our scanning tomorrow, Tradewell. But a quick answer to that is if I've got 100 stocks on my watch list from accumulating it over the last 5, 6, 7 trading days, Then I'll go and I'll do a scan of my watch list to see which ones are still acting well and click on those and then erase all the rest of them, because if the rest of them are on my watch list and they don't look good right now, it means they didn't work. So so I might take that amount. Now my new watch list now may only be 20 stocks, and then I go do my scanning again to see which other ones might look good for that day. But we'll go through all that in the scanning tomorrow night. And Tesla also is telling us they can't close this. Well, they close it below the T-line. This is a perfect example of if it closes below the T-line and then does another buy signal, you can always buy it back. At this point right here, you didn't know which way it was going. The probabilities were showing that it was heading down. I'd rather give up profits than create bigger losses. So I close it out versus holding on to it with the possibility of going lower. And I don't mind closing it out here and buying it back here as long as the chart tells me it's time to be buying back. Once again, if this was a bigger number, if this was a 200-point move and I only got 160 points of it, but each time I was in it, I knew I was heading in the right direction, that's going to have a much better compounding effect being in correct trades versus holding on to something that you're giving back a lot of your profits. Yes, Tesla was overbought, but you're not buying stochastics. You're buying the chart pattern. The stochastics just tell you where you are. So if I can see that you're in an overbought condition, what other criteria can we see? That they're having a hard time keeping this below the T-line. That means you're still in an uptrend. All right, let's see what else we got here. Tesla, some other good ones right now. This one's got the J-hook pattern. Cup and handle, fry pan bottom, classic. And where did we close? Right about at the breakout level. What did we get there with? A bullish engulfing signal. So if this opens positive, that pretty much tells me my next wave is in progress. And if this wave came from 27 to 42, 15 points, that could take you up into the $55 range. Well, yeah, AMBA has already had a very nice move, and it's starting to get exuberance. It's starting to move away from the T-line, whereas Tesla has been backing and filling, coming below the T-line and then coming back up above it. But as you can see, when it gets away from the T-line, it will come back up. Right now, we're not that far away from the T-line. SDRL. Whoops, I'm going to make this one. This one's setting up also, one of the oil stocks. And notice where it's setting up from, here at the 50. So if this starts trading positive from here, if I was buying this, I'd have my buy stop. Let's make this big enough where we can see it. I'd have my buy stop up here. Again, the question is, well, aren't you giving up some profits? Yes, but I'm improving my probabilities. I would rather have greater probabilities of making lots of small profits than buying down here and not knowing whether this is still moving sideways down or up. If it moved up through this level, I've got a pretty good probabilities that it's heading higher. It seems like we're trading against trend. Shouldn't we be looking at shorts? Yes. John, just hang in there. We've got shorts to look at. I'm just looking at the, right now in this market, with the market trading down, we still have a lot of stocks that are moving positive. So, again, that is a major benefit. It's been a major benefit to me through the years that I'm still in positions that when the market's going down, my positions are still moving up if I'm in long positions. Now, right now, I'll backtrack here a little bit. We should be in more short positions because we can see the market's heading down. So we'll show the short positions here in a little bit. Oh man, what was that? My goodness. Let's see, we did fold. Here's one of the trucking stocks, or tankers. Look what it's doing. It's trading positive, and it broke out. And when did it do it? When the transportation index has just been getting hammered in a downtrend. So I was looking at IMMU. Oh, yes. Oh, so that broke out. I would suspect a 45 degree to come off of here. Now, will that mean it might open positive and trade down? Definitely. So if I opened positive and came back through today's open, I'd close it out, see where it stopped, and then if it came back up through the open, I'd buy it right back again. But right now, if I own this one, you can see what it's done. It's broken out through that resistance level. And how did it get through the resistance level? On a buy signal, doji, bullish confirmation. There's your inverted hammer. And they gapped through that resistance level. So that told you they were wanting to buy this, even though everybody could see there was a resistance level right here. For long-term investors, this one is a pretty good chart. Came up, basically failed in the 200-day moving average area with your bearish engulfing signal. Now there's your bullish engulfing signal. This one, what does it pay? About a 6% dividend yield. I wouldn't be afraid to be buying this one on positive trading as long as it stays above the T-line and the 50. Jim, the T-line is probably a lot more effective than the Bollinger Bands. Now, we've had John on here a couple of times, and he will even admit that the Bollinger Band just tells you kind of whether you've moved too far away or if you're in the trading range. It doesn't really tell you when to buy and sell. It just tells you where you are versus the normal trading range. But that's basically the same thing the T-line does and probably does it a lot more effectively. Let's see, Mankind. I had this on here for a reason. Oh, when do you sell? Well, notice what this has done in the overbought condition. It's gapped up and did a big move. Where do most people buy? They buy exuberantly at the top. So if I own Mankind, which was a good buy right here off our cradle pattern, the J-hook pattern, this is your bobble. This is a good one to illustrate the bobble. Strong buy signal, what did it do at the first resistance level? Started selling off. And then what did it do? Couldn't close below the T-line, and they came back up through. This was the perfect place to be buying because it told you the bobble was over, and it told you the 50-day was not going to act as resistance anymore, making the 200 your next target, and it did a J-hook pattern. But now, if we know the very basics of investing based on candlestick analysis, where do most people buy? They buy exuberantly at the top. And what usually creates that? Usually a gap up and or a big candle. That tells me I want to start watching for profit taking because I've had a gap up, exuberant buying in the overbought condition, and look where we are compared to the T-line. We're a ways from it. So what's the criteria at this point? Stay long, but be ready to take profits on the first signs of a reversal signal. Okay, so the breakouts, this is the type of thing we're looking for. You put CMCM on your list. If it came up through the $36.60 level, no, the $36 level, you can be a buyer because it'd be breaking out of this J-hook pattern. So at least we can be prepared for when we should start executing trade and getting in. Same scenario on Yoku. Kind of a J-hook pattern. There's a resistance level right here. This is why you usually hear me say I'd rather buy up here knowing that it broke out, because for all we know, until it gets to that level, it may be just bobbling sideways until they get enough energy to take it up. Hold on to your individual stock charts until I tell Jim to do the double line, and then we'll do them. ATHM. Oh, I'm already way past closing time. There's a potential doji sandwich. A doji sandwich is a big bullish day, a doji, and our very simple rule of a doji is it's going to move in the direction of how they open it after a doji. So if it opens positive, then we know it's going to move positive. And usually, if it moves positive on this day, it's usually the same magnitude as this day right here, or the doji kind of in the sandwich in between the two. And it's a very high probability trade setup. Yodel also getting back up here to the breakout area. Notice what it can't do. Remember, if you always keep in mind that very, very, very few people have the T-line on their chart. So the T-line is not like a magnet, like the major moving averages, where everybody's waiting to see what happens at those moving averages. The T-line is like a natural support and resistance, kind of a Fibonacci type number or area. So when it comes back and each day or each time it hits this and moves back up, that's not because everybody's watching the T-line and buying at that point. That's more of a natural pullback area. And again, if you assimilate that with the candlestick signals and patterns, which are the accumulative knowledge of everybody buying and selling, or the graphic depiction of investor sentiment, then you can, when you add those two together, you get a very powerful combination. On ATHM, where would you not want to, if it opened positive and started trading positive, where would you not want to see it close? You wouldn't want to see it close back below the T-line, because that tells you they didn't get it up through the T-line and it didn't do the breakout. You'd close it out at that point. All right, so on the other hand, you want to find charts that are showing you great strength to the downside, especially in a downward market. MGM did a doji gap down. That's your side. And so if you can basically see what your overall trend is right now, which you can see all the moving averages and the trend is slowly moving down, this one you can get ready to short on any weakness tomorrow. We recommended going short on potash a few days ago, because notice what it did once it got back up into this level. It did a bearish harami, followed by a gap down through the T-line, and notice what it hasn't been able to do from that point. It's never been able to get back up above the T-line. So what's your bigger chart telling you? Wave 1, Wave 2, now you're in Wave 3. How far does Wave 3 have the potential of going? Whatever this is. If this is gone from 37.50 down to right in here, let's say 32.50, $5, that tells me that this could get down in toward like the $28 range. Now, will it get there? Who knows? But my criteria right now is I'm going to stay short until I see a buy signal and a reversal. Now, does that mean I need to see it close back up above the T-line? I could if we stayed with the T-line. But if it moved way down here and the T-line was still up here, then I'd be more apt to start taking profits, anticipating there's going to be a snap back up. What is the reason behind the size of the waves? I have no idea. It's just that's human nature. That wave 1, 2, and 3 seem to always see, or wave 1 and 3 always seem to be about the same. And you'll find that too if you've ever done any study with Elliott wave. It always seems to be wave 1, wave 2 is a pullback, wave 3 is usually the same size as wave 1. Then there's another pullback, and usually wave that's 4, and wave 5 is usually the biggest wave to the upside. So that's human nature. And whether you're studying candlesticks or any other technical analysis, is all based upon what prices usually do based upon human nature. And so the waves are obvious or kind of common investor sentiment factors. If the price goes through an alert threshold on an alarm, but when you look at the chart, it's back down. Would you wait for the 10-minute chart? Yeah, if I saw an alert that tells me it's time to buy, then I'd flip to my 10-minute chart to see if that is the exact time to buy. Wynn Resorts. Another one that's in a downtrend, and they've done a doji gap down. Where there's the next expected target? Well, if this is the bottom of your trend channel, somewhere down in here. STX failed at the 200. Did kind of a failure again when it came up to test the 50. So where does that take us? Well, kind of observe the obvious. We're in a downtrending channel. I would say if you draw a parallel line through here and through here, it tells me we're coming down into this area someplace. So I'd be short STX. And SSNI was a potential long for a while, but then where was it time to start reversing? First of all, when you started seeing sell signals, there's your shooting star at the same level you did a shooting star over here, and then a close back below the T-line. Now they are failing the T-line. Where's your next likely target if they start selling this off? They could be bringing it back down here to the 50. A lot of people ask, don't they come back and fill a gap? And the answer is yes. They make high probabilities they'll come back and fill a gap. But that gap may not be filled for 2 weeks, 2 months, 2 years. We're only interested in this trend to come out. The gap may be filled after months of waffling back in this direction or coming right back. So just because of the gap, and it's going to be filled sometime, it may not be during the trend that we're participating in. We're still short AU, but it did a hammer type signal today, and we're a little distance away from the T-line. We're in the oversold area. So this makes it very simple. We've had an inverted hammer. We've had a hammer doji. We're in the oversold area. We're a good distance away from the T-line. If they open this positive tomorrow, I'd probably take profits on the short side with the anticipation they're going to bounce it back up toward that level. Obviously, if they open it lower and start taking it lower, this downtrend is still in progress. CNX was another one that we had covered the short position on this day right here, because after the downtrend, there was our buy signal in the oversold area. Where were they likely to take it back to? At least to the T-line. Well, now we've seen at the T-line that that's failing. We can always re-short it, because now what do we have? We have a bearish J-hook pattern in progress. Yeah, AU has that potential of doing a reversal and bouncing back up to the T-line, but we don't know that. Remember, a candlestick reversal signal needs confirmation. For example, yesterday was an inverted hammer. That's a potential reversal signal. That's a doji in the oversold condition. That's a potential reversal signal. What do we need to see after a reversal signal? Bullish confirmation. Up until now, even now, we still don't have that. If it opens positive tomorrow, now we probably have a bullish confirmation. VIMC, this one after the, notice all the indecision up here, the big left-right combo closed below the T-line, and notice what it did today. It came back up and failed the T-line again. Makes this very simple. If this opens lower, what type of signal do we have potentially? A doji sandwich, and if tomorrow is the same magnitude as this day, I'm definitely looking at the 50-day moving average as the target, which is probably where everybody else is watching to see if that's the target. So if I short it here and it gets to here, then I immediately flip to my 10-minute chart and see what are they doing. I know they're on the 50-day on the daily. What's my 10-minute chart telling me? Are they holding here, or coming out of this fry pan bottom. But when they closed it back below this level, that was the time to close it out, because when can you buy it back? When it comes back up above the T-line. Otherwise, if you're hoping for it to come back up, you're still hoping. And another one, SWKS. As soon as it closed below the T-line, you want to stay out until you see it close back up above the T-line. You had the fry pan bottom. Now you had the cup and handle, but we don't know whether they're going to take it back down here or even down here someplace before taking it back up. Why take the risk? Close out the position. I'd rather give up some potential profit than hold on for actual losses. Okay, I guess that's about all I've got for tonight. Are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 4.6 seconds, do the next double line. Let's see, HLX short. Not yet. If I was going to go short on this one, if you're short, you stay short. You don't want to see it open positive tomorrow because that's breaking this downtrending channel. If I was going to short it at this point, I would probably use today's low. If it came back down through there, that's telling me they're moving down away from the T-line. That's when I'd short it. OLED, I wouldn't go long, but I'd stay long. Notice it's in a 45 degree after the big breakout. You stay long until you see a close back below the T-line. PBCT. Another one where you stay long. At this point, I would use today or yesterday's or Friday's open. You have a doji, you're in the overbought area. If it came back down through there, they're profit taking. Probably at this point, if it opened lower and traded back below today's low, that means they're probably bringing it back to the T-line. Oh, pshaw. ATRA, you can be buying this one if it comes back up through today's open. That would tell you the profit taking's over. And your fry pan bottom, there's your kind of your T-line crunch. There's kind of your bobble. I'd be a buyer, especially if it came up through today's open. CHRW, nothing yet. You do have the buy signal. This would be kind of the same scenario. I'd probably want to see it come back up through this level, telling us that a couple of days of profit taking is over. If it closed back below the T-line tomorrow, I'd come out of it because that tells you your downtrending channel is still in progress. Rare double inside day pattern. Use high and low of Friday's candle as an entry trigger for long or short of Fridays. Yeah, if it opens lower, this downtrend's in progress. If it came up through that level, you could be buying. BLDP, there's your message. It's going to move in the direction of how they open it after a doji, so if they open it positive, you can be buying. If you wanted to be more conservative, you put a buy stop above today's high. That would tell you today's profit taking is over. FCX, stay short till you see it close back up above the T-line. ConocoPhillips has an inverted hammer and bullish confirmation. If I was short, I would definitely be covering it, but I wouldn't be going long until I see it close above the T-line. The SPY still heading down. just like the S&P, obviously. And Southwest Airlines, bearish J-hook pattern. You could be shorting this one. You're not exuberant in the exuberant oversold area. Tried to come up. Got a bearish J-hook pattern in progress. MAC, stay short till you see a buy signal and a close above the T-line. ACAD, this one has to open positive and trade positive tomorrow. Otherwise, you close it out. Bank of America, you can stay long on this one and use the T-line as your stop. And AIG, you can get ready to short this one, but here's your next support level is coming up through the bottoms here. So if you short it, just watch to see whether they break through that level or not. CNTY, stay long as it doesn't close below the T-line. BOFI, that's a good looking chart at the breakout level. I'd be ready to buy this one on positive trading, doing a doji sandwich breakout. BOH, stay long, J-hook pattern. MXL. That's your kind of your belt hold signal. To stay long on this one, it has to open positive and trade positive. If it opens lower, they're at least coming back to test the T-line. But that's a sell signal because you gapped up and traded it off immediately. That pretty much tells you that the bears are now taking control if they open it lower. CRMD, you can stay short on this one. You're still in a downtrend as long as it stays below the T-line. To buy it, it needs to close back up above the T-line. Bidu, right here at the 50 and above the T-line, which means it has to open positive to stay in it. If it opens lower tomorrow, you close it out. You can always buy it back when it comes back up through the T-line. Jamel, kind of a little bobble between the T-line and the 20. To stay long, it has to open positive tomorrow. CSLT, nice slow curve. More than likely you're heading for the 200-day moving average. WBAI, wobble, kind of backed off today. It has to open positive also tomorrow to stay in it. But as long as it stays above the T-line, you should be all right. MEI, nothing here to get real excited about. You're getting a lot of sell signals up here. If this opens lower, it's coming back to test the T-line. JD.com, get ready for a doji sandwich breakout on this one. Which means if they break it out, they could be taking it back up to the top of this trend channel. Lily's, there's your cup and handle, your classic fry pan bottom J-hook pattern. You can be buying this one. BOX, nothing here yet, but it's getting there. You can see there's kind of a wedge formation. You can buy this one on positive trading. Just watch to see what it does once it hits these resistance levels. Fred, you stay long until you see a sell signal. At this point, being in the overbought condition, I'd use today's low as my stop. GPro is telling you that the 200-day moving average is not acting as a resistance anymore. They're actually using it as support. Another one that you can buy on positive trading tomorrow. An AGEN, nothing here yet. I'd still use the T-line as my stop. Rare, another one that has to open positive, making the J-hook pattern stay in progress. I would use today's low as a stop. If it came back down there a second time, they're selling it off, obviously. and they're not supporting at the T-line. Sage also, this is not a reversal signal, but you definitely want to see this stay above the T-line. If it opened lower, I'd probably close it out and buy it back when it came back up above the T-line. PVH, you can be buying this one on positive trading tomorrow. Notice that the 200 now is acting as support. And Juno did a bearish Harami. This is what you call a tweezer top. And a tweezer top is pretty much when they've topped out right at the same level. So this makes it very simple. If they open this lower, I'd close out the position. It has to open positive and trade positive to stay in this one tomorrow. Because notice where the bearish Harami occurred? Right basically at the same level it topped out before. LLCK, same scenario here. If it opens positive, you're in a strong chart. If it opens and comes back below today's low, I'd use today's low as my stop. And CTXS, nothing here to get excited about. You've closed more than halfway down the candle that told you the bulls were in control. I'd probably be trading something else at this point. S-Fun had a good looking chart. It backed off today, but it's still above the T-line and didn't do a sell signal, just backed off. And you're not in the overbought area, so I'd stay long. I'd still use the T-line, which also would equate probably to the 200-day moving average as a stop. Oh, PBMD. You want to keep an eye on this one. It was trying. It started trading up a little bit today, but backed off. The reason you want to keep an eye on this one is if this gets moving again, the percent return on that initial breakout, they could start taking back up to that same percent return. Because now it's not at new highs, so the next move is probably slowly, or at least taking it back up to test those new highs. Chris, just stay long. Good looking chart, as long as it stays above the T-line. MWW, nothing here to get excited about. There is no trend to this one. I would be someplace else. Let's see, did we do G-Pro? Yeah, we did G-Pro. Tupperware. Tupperware, you can buy it if you like it, but here's your obvious resistance level. It's right here at the moving averages. If I was going to buy Tupperware, it would be after it closed up above those levels. COF, if this opens positive tomorrow, you've got a doji sandwich breakout. ACHC, you can stay long as it stays above the T-line at this point. AHS, just stay long as it stays above the T-line. CLI, you can be buying this one. I would anticipate this has some sort of dividend yield to it. I wouldn't buy it aggressively until I saw it break out through this downtrending channel, which is it's trying to get there right now. AMPI, looks more like a cup and handle. This one I would also be more apt to buy if it came back up through today's open, giving you kind of that little cup and handle effect, with the idea that they're still trying to take this back up to the moving averages. QSR, this one you get ready to go short. Notice that they failed here at the T-line. Get ready for your bearish doji sandwich, not doji sandwich, bearish J-hook pattern. Yeah, at best you want to be short on this one. Let's see, I think we did CNTY. Well, maybe not. This one you stay long. Whoops. BOFI. Yeah, I've already written that one down. Yes, you want to stay long on that. I think we did BOH. Yes, J-hook pattern, you stay long on this. Why not check futures in morning, enter buy stop or sell stop? You can. That's what I usually do is when I wake up, if I've got some good ideas for longs and some good ideas for shorts, and I see that the pre-market futures are up, the Dow's going to open up 60 points, I'm more apt to go after the longs. If it's going to open down 80 points, I'm looking at the shorts. Oh, your granddaughter is graduating. All right. Yes. Tomorrow night will be recorded. Which pattern has the highest probability of a successful trade? Well, we know the fry pan. We know that all of them work. So there are patterns that have worked consistently through the years. I make a lot of my money on the fry pan bottom / slow curve breakout, and also on the J-hook patterns. When I do see a scoop pattern, I'll take advantage of that one, but I don't think they're any more stronger than the others. But the fry pan bottom, slow curve, J-hook patterns are more, more available, more frequent. FXMC, you can be buying this one on positive trading. Just make sure your volume is good. Aisle, just stay long on this one. That's a nice little fry pan bottom breakout. UNIS. If your volume's good, that's a nice little cradle type pattern. You can be buying this one. I would use the halfway point of today's candle as my stop, which probably also would equate to the T-line. Tomorrow, no, Fabio, tomorrow is a members only session, I think. But more than likely, you will get a password for tomorrow. Okay, I've kept you way past your bedtime. Anticipate some more downside until they hit a support level. We're getting there, but not there yet. Vince, if you do, you'll get an email for tomorrow. Is it tomorrow? Yes, tomorrow. All right. We'll see everybody bright and early in the chat room. We'll see you then.